Hey everyone, welcome back. If you want to stay financially stable no matter what happens with the economy, inflation, or your job, you don't need a complicated system. You need a few simple, minimalist money rules that you actually follow. Today I'm sharing the minimalist money rules that keep people stable year after year. These are not extreme. They're practical, realistic, and they work in 2026. Let's get into them. Now question is why minimalist rules work better. Most people try to manage money with too many rules, too many apps, and too many goals at once. That usually leads to overwhelm and quitting. Minimalist money rules cut out the noise. They focus only on what actually keeps you stable. Knowing your numbers, spending less than you earn, protecting yourself with an emergency fund, and avoiding the debt traps that destroy progress. These rules are simple enough to remember and strong enough to keep you steady when life gets messy. Here are the rules that matter most. The core minimalist money rules. Rule 1. Know your real monthly numbers. You can't manage what you don't measure. Track every dollar for one full month without changing anything. Most people are surprised by how much they actually spend. Once you know the real cost of your life, every other decision becomes clearer. Rule 2. Live below your means every single month. This is the foundation of financial stability. Spend less than you earn. When you get a raise, don't automatically increase your lifestyle. Keep expenses steady and direct the extra money to savings or debt. The gap between income and spending is where stability is built. Rule 3. Keep your fixed costs low. Housing, car payments, insurance, and subscriptions are the expenses that come every month whether you like it or not. If these take up too much of your income, you have almost no room left for emergencies or progress. Keep fixed costs as low as reasonably possible. Rule 4. Build a real emergency fund. Aim for 3 to 6 months of essential expenses if your income is stable. If your income varies, aim higher. Keep this money in a high-yield savings account, separate from your everyday spending. This single buffer prevents most financial crises from turning into debt. Rule 5. Use waiting rules before you buy. For smaller purchases, use the 30-hour rule. For bigger ones over $100, wait 30 days. This simple pause kills most impulse buys. Also use the one-in, one-out rule. When something new comes in, something old goes out. It keeps clutter and spending in check. Rule 6. Never finance things that lose value. Cars, clothes, gadgets, and lifestyle upgrades should not be bought with debt if you can avoid it. Debt on things that go down in value is one of the fastest ways to lose stability. Pay cash or wait until you can. Rule 7. Automate the important money moves. On payday, automatically send money to your emergency fund, savings, and any debt payments. When the important transfers happen first, you spend what's left instead of hoping there's something left to save. Rule 8. Focus on one financial goal at a time. Trying to build an emergency fund, pay off debt, invest, and save for 5 different things at once usually means slow progress everywhere. Pick the most important goal, finish it, then move to the next. Momentum compounds. These 8 rules are simple on purpose. Complexity is the enemy of consistency. How to start using these rules. You don't need to apply all of them perfectly on day 1. Start with the first 2. Know your real numbers and live below your means. Track your spending this month. Look at your fixed costs and see if any can be lowered. Open a high-yield savings account and set up a small automatic transfer. Once those are in place, add the waiting rules and the emergency fund goal. Keep the system simple so you can stick with it for years, not just weeks. Financial stability doesn't come from perfect markets or perfect income. It comes from a few clear rules you follow consistently. Know your numbers. Spend less than you earn. Keep fixed costs low. Build a real emergency fund. Wait before you buy. Avoid debt on things that lose value. Automate the important transfers. And focus on one goal at a time. Do these things, and you give yourself a real chance to stay stable no matter what happens. Which of these rules do you already follow, and which one are you going to start this week? Tell me in the comments. I read every single one. If this video helped you, like it, subscribe for more practical money content, and turn on notifications. Useful tools and resources are in the description. Thanks for watching. Keep it simple and stay consistent. I'll see you in the next one.